Hello and a very warm welcome back to part 5 of our series looking at all things remortgaging. In this episode, we're looking at when you should consider moving mortgages and giving you some tips for how to do it. My number one tip is to speak to a mortgage advisor. Today's mortgage market is rapidly changing, and it can be hard to work out whether to go for a fixed rate or try the flexibility of a variable one while you wait to see what the whole market's gonna do. There are so many different deals out there. The rates you see advertised might not be actually what you get, because lenders decide what rate they'll offer borrowers based on individual circumstances. The good news is that we've popped a link below which will connect you with one of our preferred mortgage advisors. They will be able to offer free advice for most people. As I've talked about in a previous episode, homeowners generally remortgage for one of three reasons: to get a better deal, to increase their borrowing to fund something like home improvements, or because their current mortgage deal has come to an end. In the past, it's often been possible to remortgage to a lower interest rate. If you borrow the same amount of money over the same length of time, you'd save money doing it this way. But with the recent hikes in interest rates, many people will actually be coming off fixed rate deals as low as 2.5%. And in December 2022, the average 2-year fixed rate mortgage was 6.5%. So I'm afraid it's unlikely you'll find a better deal out there. And the forecast is that the Bank of England base rate may go up yet another percentage point to reach 4.5% at some point this year. In episode 3, I explained how much a 1% increase can cost you. So it's not surprising that many people are trying to decide whether to lock in a new fixed rate deal now to protect themselves from future interest rate rises. When you remortgage, you are effectively taking out a new mortgage that pays off your existing one on a property that you already own. It doesn't involve moving home. Nevertheless, when weighing up whether to remortgage to another deal, remember that while advice and guidance from mortgage experts might be free, the process isn't. You will often face arrangement fees, charges for having your home valued, and fees for a solicitor to do all the legal work involved. Sometimes the lender will offer discounts on these or will pay cash back towards the costs as part of the new deal. If you're switching away from your current fixed rate before the term is up, I'm afraid you are likely to have to pay an early repayment charge, which you might see written or referred to as an ERC. Most ERCs apply for the whole of the fixed rate mortgage term, but they do often reduce from, say, 5% of the total loan in the first year to perhaps 1% in the final year. So there is a difference. So if you had 1 year left on your 200 grand mortgage, for example, and the ERC was 1% of your loan, it would cost you £2,000 to exit the deal. In this case, you might want to wait and see how things look in a year's time, when you could switch deals penalty-free. But if the interest on fixed rate deals has gone up by 1% in the meantime, you might have been better off paying the exit fee and switching sooner. So it's complex, but make sure you do the sums with the help of your mortgage advisor. They are best placed to help you through that. When you remortgage, you'll have to go through an affordability assessment and credit check. One of the things they're going to be looking at is how much you want to borrow compared to how much your home is worth. If the price of your property has gone up, the percentage of the value you want to borrow will be lower, which means you're a less risky borrower, and that often means you're qualifying for a better interest rate. Other things that can help you get the best interest rates are making sure your credit history is healthy, doing your own affordability check by doing a proper budget and clearing any old debts or unnecessary outgoings. Finally, have all the documentation together so you can move quickly. If your mortgage broker finds a good deal, get onto it swiftly, because it might not be there for too long. Good luck, and do join me next time. Please do remember that your property may be repossessed if you do not keep up repayments on your mortgage. You may have to pay an early repayment charge to your existing lender if you remortgage, and individual savings may vary. Your savings will depend on personal circumstances.